Hello again, everyone. Welcome back. In this technical analysis of the stock market video, we're going to take a look at the S&P 500, the weekly, daily charts, take a look at the SPY, which is the ETF for the SPX, and of course, look at the Elliott wave picture. Look at three indicators that I look at. We look at maybe about 8 of them or so almost every day, but we're going to take a look at 3 of them here today. And then check in on oil and XLE and see what's going on with oil and commodities. Okay, so starting off here with the Dow Industrials, the S&P 500, and the NASDAQ 100. The Dow was up 42 points this week, so barely up, okay? But when you take a look at the S&P and the NASDAQ 100, we got some coiling going on. Look at the compression. The trading range for this last week was inside the previous week, which was inside the week prior to that. So we were down 7.2 this last week on the S&P, and on the NASDAQ 100 down 78. But again, the same kind of coiling going on. So we got some compression. We're going to get a breakout one way or the other, okay? And let's take a look at the side-by-side of the industrials and the transports. So the industrials up 41.65, the transports up 131. So I continue to look at the transports, and I'm thinking of, we had this move down here from, I guess this was like October, November 21. And then we have this counter trend move. I don't think it's done, just like I don't think it's done quite yet on the rest of the indices. And so what I think is going on is a WXY, and therefore this Y would be a final zigzag, which would be right like this. Now that's what I'm watching for to see if it plays out. And yes, it could very easily take us right up to close to the old highs. So that's what's going on with the transports right now. We'll see if we get any kind of rallying. I mean, look at on the weekly, we've got the 10-week above the 21-week, above the 55-week. I mean, all the moving averages are aligned higher. And we'll see if we continue trending that way or not. All right, let's go back and take a look at the S&P. So on Friday, the S&P 500 was down 54.78. So pretty strong little move that happened in here on Friday, closing below the trading range of the prior 4 days. Okay. Now, the interesting thing that was going on is we had quadruple witching, right? So we had options expiration, futures expiration, and of course, the switch out to the December futures contracts and that type of thing had been going on for days. But everything kind of came to a climax on Friday, and sometimes it exasperates the move that we get like we got on Friday. So we'll see. It is a little bit negative looking, so we'll see if we continue to get pullback in here. Let me show you what I'm looking at on the SPY. Here's what I'm watching on the SPY. I'm watching this box. I'm watching this low that occurred here on August 18th and the high that occurred right here on September 1st. Okay, and here's the numbers associated with the intraday high and intraday low. So I'm really watching this right now. And where are we sitting? We are right smack in the middle. This is a 20-point range, and we are literally halfway down. We're 10 points down in this. So really watching to see which way this is going to go. I'm going to tell you what I think is happening with the Elliott wave picture. Here's what I think is happening. Let's look at the weekly, and then we'll go to the daily. So I think we've got a big flat that's going on. I think we have a primary wave A, a 3-wave move, and I think we have a primary wave B that's underway, which is another 3-wave move. And this C wave, which has extended, is a 5-wave move, impulse wave structure, and I'm looking for this 5th and final wave to finish out, okay? And this could be either an ending diagonal or an impulse wave. And what's the difference, right? For those of you that are not totally into Elliott wave, an impulse wave, you do not overlap the wave structure. And the ending diagonal pattern, which occurs in like a fifth wave in here, is going to have continued overlap, 4 overlapping 1, and there's going to be a series of zigzags. So that's what's different. There's several things. Now, what am I doing with the dash line in here? For this to be a true flat and have this play out like this needs to get above a 90% retracement of wave A. And that's where it achieves it right here. When it gets above 466.79, you get to this point, wave B has retraced 90% of the wave A down. Can it go beyond? Absolutely. It can go right up to the beginning and it can go higher. Okay, so that's why it's critical to watch and see what kind of wave structure are we getting in this fifth wave. That's where I think we are at. And so now when I look at the fifth wave, I don't think we're there yet. Okay, and this is what I'm looking at. I do think we may have a first zigzag. The other possibility, so here's what I'm looking at: a zigzag, zigzag, come up with another zigzag for wave 3, then we get 4, and then we get 5, and we finish it off, and these are a series of zigzags. So this looks like the first zigzag, right? This one looks like maybe we're not finished yet, which implies maybe a little bit lower move down in here following the pullback on Friday. Maybe we come down to that trend line. Maybe we go a little bit below it. And yes, it's going to overlap this first down in here. Yeah, well, actually, this is 1. This is going to be 2. So don't worry about that. Don't worry about the fact that we're overlapping this. That doesn't matter. Okay, so here's 1. This will be 2. Then we're going to get another zigzag for 3. That's what I think is playing out. There's another possibility. It could be that this is a 1, 2. Then that would imply that this isn't a true zigzag. But to me, it looks more like a zigzag than it does anything else. But you'd have to call this like a little fifth wave in here, and I just don't like it. It looks better to me counting it as a nice zigzag and getting a second one right here. All right, enough on that. That's where I think we're at. So this is the channel that we're in. This is where we're projecting up higher for the end of that fifth wave of wave C. So I think we are rapidly approaching the moment of truth in here. We're going to take out this high, or are we going to take out this low? If we take out this low, we continue to push higher, then it's going to reinforce the alternate count that I was holding before I moved to this large flat. And that would be, the alternate count would be this. That intermediate wave 2 is done up here at the high, and we are working our way down in intermediate wave 3. But I don't like it for a number of things. Some of the things we're seeing on the indicators, I think supports a continued move higher in one final thrust, okay? So that's where we sit with that. Let's take a look at a couple of the indicators. And let's start off with the VIX, because talk about being extreme. Here we are. Look where we closed on Thursday. On Thursday, we closed at 12.82. Okay, that was the lowest close since back into sometime in January 2020. So over 3.5 years, this is the lowest close on the VIX. And, you know, just when you thought, okay, maybe we're going to flip, maybe we're going to turn, and, you know, they gave it a gallant try on Friday and then backed off, could not close above the 10-day moving average, which, you know, we started to do that numerous times, and we've tried to flip and turn and actually start to put in a turn in here, and then it fails. So right now, this is just getting every indication that the market still wants to continue to keep trending a little bit higher. Okay, so that's the VIX. Let's take a look at the percent of stocks in the S&P 500 above their 200-day moving average. We're sitting right at 50%. Half of them are above and half of them are below. But the other thing I'm watching is look at this little pattern. It almost looks like a little double bottom. potential type thing in here. And the moving averages are coming in here. I'm looking, is this about ready to flip? Are we going to flip to the upside and get some kind of little move back up in here? And we carry us up and we finish off our fifth wave that I was just talking about on the SPY? Well, if you look at, this is the 200-day, look at the 50-day. Similar type thing, even more so. We actually overlapped on Thursday, where we got right on top of each other here. And then we pulled back down a little bit on Friday. So we haven't really done it, haven't really flipped and turned yet, but we're very, very close. We're sitting at 33% when you round it of the stocks are above their 50-day. So that's a couple of indicators we look at every day. We're always monitoring. Of course, a couple of weeks ago, I talked about the equity options put to call ratios, and I'm not going to keep talking about it because it hasn't gotten any better. Just, be warned. Okay, so that is the picture there. Let's take a look at the Bloomberg Commodity Index, because this is looking interesting. Let me go to this view right here. Okay, so this is a weekly view of the Bloomberg Commodity Index. We broke out of this channel, this downward sloping channel that we'd been in here for, back since, mid-22, mid of last year. And we kind of subtly broke out of it. And then we kind of moved sideways. And so it looks to me like a little bit of a head and shoulders reversal type pattern. And the high this last week came right to that trend line. That trend line had been drawn before we got this, candle that formed this last week. And so right now it looks like it's getting ready to break to the upside. And it's kind of interesting that, we've got the dollar index that has been up for now 9 weeks in a row. You'd think that that thing is about ready to run out of steam, and if it runs out of steam and starts selling off, is that going to help drive commodities higher? Maybe. Okay, I know there's a lot of other dynamics going on, a lot of things that are at play, but when we take a look at oil, it continues to want to push higher. USO, let's look at the moving average view first. And on Friday, it wasn't up much, up 17 cents, but for the week, up almost $3, pushing pretty strongly in here on USO. And when I take a look at the Elliott wave picture in here, here's what I've got. I've got this as going even higher in intermediate wave 3. Now, this was very messy down in here. This is my best take on it. It's possible that intermediate wave 2 didn't end till like over here, but I'm just staying with this because it really doesn't gain me a whole lot to change it, because we're clearly pushing up in here very nicely. And I think we're in a fifth minor wave, okay, of the third intermediate wave higher. Okay, so that's what I'm looking at. Of course, this is all a part of the third primary wave up. So my expectation is that oil is going to continue to move to the upside. That's the way we've got it configured. That's the way it looks like it wants to go. And it is several times the daily looked like it was going to, have every reason to stop and have divergence. And then the divergence would just disappear as it continued to push higher in here. So right now, this could easily extend. And the thing with commodities, the fifth wave in commodities usually is the one that extends more so than, like in stocks and indices, is a lot of times it's a third wave. So that's the picture on USO. Let's take a look at XLE. Let me go back to the moving average view and let's just see how XLE looks. Now it looks a little bit different in here. And I say a little bit different in that the picture is a little different than USO and oil. So right now what I'm seeing, this almost looks like you'd have to have a pretty big leap to do this, to say, well, maybe we have some kind of ascending triangle kind of thing that's going to push. It's not perfect. I mean, but you kind of get that picture a little bit in here. And when you look though at the daily chart, here's what jumps out at me on the daily chart is this last little leg in here is definitely seeing divergence. So a little bit confusing in here. It could be that we get a breakdown, a little bit of pullback and rest, here in the XLE. We'll see. But that's what I'm seeing right now in XLE. It just looks like, yes, this final push is has got some pretty strong divergence in it, and I wouldn't be surprised to see it kind of pull back into this territory, maybe 88 or so, and get back to the 55-day moving average, then regroup. So that's the picture that we've got right now on XLE, USO, West Texas Intermediate. It closed near-term futures 91.21, $91.21. So back over 90 on West Texas Intermediate. Okay, that's it for this weekend. If you felt like the video was helpful, give it a little thumbs up on YouTube. And if you're not a subscriber, hit that little subscriber button. And if you'd like more of that this kind of information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone have a great week. We'll talk to you on the next video.